The current global economic situation continues to hit countries hard, with inflation rising beyond central bank targets. On a list of 10 countries with the worst inflation right now, there are 6 African countries. We'll tell you who they are and what can be done to slow down the rising inflation. We'll also check in with how major stock markets on this side of the continent are performing. This is Business Edge. I'm Tolulope Adeleru-Balogun. Let's start with the African business headlines. The Biden administration has replaced a deal that the administration of former President Donald Trump signed with Nairobi by establishing a new strategic trade and investment cooperation. The U.S. Commerce Representative's Office explained that the U.S. and Kenyan governments will begin working within 3 months to build a plan for involvement in 10 sectors, including agriculture, digital trade, combating climate change, trade facilitation, and customs procedures. The launch comes after the U.S. government announced last year that it will evaluate Kenya's bilateral trade negotiations under the Trump administration in order to determine whether to enter into a free trade agreement. And staying with East Africa's largest economy, Kenya has surpassed Ghana, Morocco, and Nigeria in terms of supermarket penetration, highlighting the continued competition among local and international firms for a larger share of Africa's market. A recent study indicated that only 3 out of every 10 consumers still buys at supermarkets, leaving a sizable market untapped by the industry's major competitors. In a market that already boasts several international chains, Kenyan customers purchase 77% of their commodities, including food, beverages, and personal care products from more than 250,000 tiny retailers known locally as dukas. South Africa is considering steps to encourage expenditure by its towns and cities which are struggling to deliver essential services like power and water. Finance Minister Enoch Godongwana, in an online speech, says that governments may permit towns to front-load infrastructure spending so they can use all the money allotted for a 3-year period in the first 12 months. In places where the government already struggles to supply the basics, towns and cities are underspending on things like roads, water, sewage, and electricity works. This hinders service delivery and can lead to violent protests and sporadic attacks against foreigners. The absence of services contributed to the biggest rioting South Africa has seen since apartheid ended last year. Vice President Mahamudu Bawumia has revealed that any gold mined in Ghana will be sold to the Bank of Ghana first in a bid to maintain the local currency and guarantee macroeconomic stability. He noted that government is also striving to assist with the accreditation required for the country's refineries and the establishment of more refineries. Ghana emphasized that it must increase the benefits accruable from the mining of its minerals through value addition. Today's inflationary surge is being felt not just by the advanced economies, but also by the majority of emerging markets and developing economies. And though it causes vary across countries, the task of resolving the problem ultimately will fall to the world's major central banks. More on this after the break. Compounding the damage from the COVID-19 pandemic, the Russian invasion of Ukraine has magnified the slowdown in the global economy, which is entering what could become a protracted period of feeble growth and elevated inflation. This raises the risk of stagflation with potentially harmful consequences for middle and low-income economies alike. Global growth is expected to slump from 5.7% in 2021 to 2.9% in 2022, significantly lower than the 4.1% that was anticipated in January. It is expected to hover around that pace throughout 2023 into 2024 as the war in Ukraine disrupts activity, investment, and trade in the near term. Pent-up demand fades and fiscal and monetary policy accommodation is withdrawn. As a result of the damage from the pandemic and the war, the level of per capita income in developing economies this year will be nearly 5% below its pre-pandemic trend. The World Bank has ranked countries in the world according to their inflation figures for 2021, and 6 African countries made the list. Sudan topped the list at 382.2%, with Zimbabwe coming in at number 3, Ethiopia was 5th on the list, Zambia 6th, Nigeria comes in at number 8, and Guinea rounds up the top 10, unfortunately, in 10th position. Joining me now from Lagos, Nigeria, is Gospel Obele, Chief Economist for Streetnomics. Gospel, welcome again to Business Edge. It's good to see you.
Thank you for having me, Tolu. Great speaking with you again.
So in terms of inflation, we know that there are largely 2 types that we deal with. The demand pull inflation, which you have too much money chasing too few goods, and then cost push inflation with price increases in supply inputs leading to a rise in the cost of goods. Are we dealing with a combination of the 2 right now, or is there one type that's more predominant in the global situation we're seeing that's also leading to the rising inflation across the continent?
So yeah, it's we're seeing that these dynamics are shifting in the sense that when we had the pandemic, it was a case where people were seeking to at least buy products and services, but there was not there were lockdowns and all of that. So on post lockdown, we saw a rush. So there was sort of like a demand pull on the inflation numbers, as it were, and that was primarily because also the recovery was in view. A lot more policies were introduced to sort of like encourage people to buy and all of that. And organizations were also, working around price discounts and the likes. But since the Russia-Ukraine war, we've seen that demand pool has moved to what we call cost push. And with the rising cost push is also leading to what we call increase in the cost of living as well, because of imported inflation dynamics and the fact that inflation hits heavily on food and energy prices. Now, that increase in cost of living is also reinforming how consumers engage. So you have consumers who are seeking to either spend on cheaper products, but also to gain same level of satisfaction, or consumers are also seeking to buy from cheaper suppliers, or as the case may be. So you will find a situation where we're moving between cost push as well as the demand pull that is further reinforced by increase in cost of living and consumers seeking other options to retain satisfaction because of tougher consumer choices as it were. So it's hovering around, but it looks as though the cost push is way more an impact than the demand pull. And it's largely a global conversation because we've seen nations across the board reaching 9, 10, 40-year high in inflation numbers.
So for the African continent, especially when you look at the food and fuel conversation that we're seeing and the high rise in, of course, inflation, would you say for the African countries that made the World Bank's list, even though they already had their own economic issues, this is more imported inflation than anything within their own limits of control?
Yes, so it's for the African continent, it's more of cost push. Cost will mean that because you have leakages within your structures and you're not positioned to be globally competitive, because when you're globally competitive, it means that you can manage the pace and the impact of global pricing on your economy. So there are layers to handle or take that shock, as it were. So because you don't have that, it means that construct or that leakage construct is also reforming the cost of living and cost of all of these dynamics. So it's a cost push. And also, like you mentioned, inflation is being imported into these economies. So it's going to happen for a long term. And that's because these economies have also been poorly managed in the scheme of things. So even if things generally get better globally today, you see that it will take Africa a longer time, all right, to sort of like find the put together around this whole increase in cost of living and the impact of global inflation on the consumers and the African economy generally.
So we can agree that the global headwinds that we're all experiencing are quite similar, but the stories for each of these countries and how it's impacting us are quite different. So let's talk about that. In terms of the similarities and the differences in African economies that made the list, what do you see?
In terms of similarities and differences?
Yes.
Yeah, so what we've seen is we've seen a divergence of different root causal issues. For some countries, war and conflict, and severe dependence on the West has also aggravated, their inflationary position, as it were. For some other countries, the nature of governance and leadership, say for instance Zimbabwe has been battling high inflation way before now. But if you talk about the Sudan case and the likes, it's more around war and conflict. But for Zimbabwe, it's more around deep-seated poor governance issues. I mean, when you have poor governance, you also have another layer of poor economic management as well. So you have that. For Nigeria, it's more or less poor governance, but more around deep structural issues and fiscal indiscipline. So relatively, Nigeria has a better structure than a lot of other countries that have made the first 5 lists economically. But because our structure has been left as poorly managed, and that has generated its own mixture of leakages, plus the fact that you have a high level of fiscal indiscipline. So yes, you may have had really bad leadership in other economies, but with Nigeria, it comes with a weave of fiscal indiscipline as well, gross fiscal indiscipline. So it's the same problem, it's the same challenge, but realize that at the root causal level, the problem exists differently. So for Africa, there is no one-size-fits solution to deal with its inflationary problem. Just being competitive is not enough. We need to also rework the bane of price penetration and all that on the economy, on the regional and local economies here.
A very valid point there. So let me start with the country on the top of the list. Unfortunately, that is Sudan in East Africa with 382.82%, the inflation rates for 2021, which was up over 100% from the year before that. And Sudan has come back to the international community, has had some passes, debt has been forgiven, there's been some restructuring, there's been aid given to Sudan, and at least a helpline extended in the past 1 or 2 years. But now we see Sudan back at the top of a list such as the one with the worst inflation in the world. What do you think happened? Yes, the conflict still happens. Yes, the war is still there, but they were making progress even in the midst of all that. So beyond Russia and Ukraine and beyond COVID and beyond the war and conflict, was there anything else that pushed Sudan to the top of this list?
So the first place we need to start from is the fact that you cannot really transform in quotes until you start from the inside out. So yes, Sudan got some of debt forgiveness, a lot of aid assistance and all that, but primarily the internal construct of what you define as Sudan, all right, it's not yet in that position where they can be self-reliant enough, to come to improve on a set of things. Same with Nigeria as well. Our debt was also forgiven in 2004. But look at where we are now today, all right? The social fiber, the social construct of how we govern, of how we think for change, and how we produce value within the scheme of things, both regionally and globally, is a major factor, all right, in defining, all right, how events change over time, or if we go back to the past and all of that. So things have not fundamentally changed, even if Sudan received as much as ODAs and debt forgiveness and all that. So that narrative is not a Sudan conversation only. It's largely an African conversation. A lot of African nations are on that table, but the conversation is different at different levels. So for different African economies, they deal with that problem differently. So you may have gone through the military era, but even if you move into democracy or civilian era, you are still in a military mindset. All right. So the book of Why Nations Fail talks about the fact that institutions do not necessarily change in countries that are still poor today, even if some form of transformational help were brought to their table. So we need to think of it from an inside out. Also, secondly, is the fact that inflation in Africa, especially in Nigeria and Sudan and all those countries, are largely understated as well. And that's because for the Nigerian construct, our inflationary basket or the inflation basket has not been reviewed in a long time. If you genuinely review the inflation basket, that means what makes up the items that are used to define the inflationary metric or define the rate. If you review what's in the basket of those items, you realize that in the real context of things, the Nigerian inflationary position is actually higher than what it is, than what it's being quoted now. And all of that. So same with Sudan, same with other African countries as well. We are not so much methodological and scientific in our approach. If you go that route, you say that it's actually worse than it is right now. Yeah.
All right, so Gospel, hold on. We're going to continue this conversation. We've talked about Sudan, which unfortunately has topped that World Bank list of countries with the worst inflation rate. Ethiopia is on the list, Zimbabwe is on the list, as well as the largest economy in Africa, that is Nigeria. Then we'll also look at what policymakers need to be doing in this time where we are facing global headwinds and that very, very strong word, I'll tell you which one, has entered the conversation. Do stick around. The primary drivers of the inflation spike are not uniform across countries, particularly when comparing advanced economies and emerging markets as well as developing economies. Diagnoses of overheating that are prevalent in the U.S. discourse do not apply to many emerging markets and developing economies where fiscal and monetary stimulus in response to COVID-19 was limited and where economic recovery in 2021 lagged well behind the advanced economies' rebound. And now the word stagflation has entered the group chats, and many central banks around the world are struggling to get a handle on inflation. Still with me is Gospel Obele, Chief Economist for Streetnomics. Now, Gospel, when we look at this, we have Zambia is 6th on the list, and this is a country that in the past year has reduced its inflation rate from 22.02% in 2021 to 9.7%. But we also saw a situation where it is now in negotiations over its debts, the first African country to default during the COVID era, and the conversations are happening. So what do you think has been its strategy that has been effective so far in addressing inflation, unfortunately, before this now?
Yeah, so we realize that there's some form of perceived political commitment within that space to resolve most of its issues, and trying to also join the league of single-digit inflation economies in Africa. I mean, South Africa is also there, and a few other countries like that at the time, though. So we're like the first level one to think of is the political commitment and all that, and that drives a lot of confidence within the international community, especially even in the face of stakeholders, in debt conversations and all of that. The perception that there is a political will to improve the state of the economy to properly manage and reduce cost impact on the economy, it's a plus. But then again, I mean, I have a very, very strong opinion around this, that many of the inflationary conversations in Africa are still underserved, or and all that, and that's because we haven't reviewed our inflationary basket in a long time. So before we make the conclusions that, okay, a particular economy was once 22%, now it's 9%, or it was probably at a single digit, now it's double digit, we need to also review the context of the inflationary basket. Until that, we can properly do that, we may not really be able to tell which nations in the African context are on the top 10 or on the list 10. But primarily, I know that Zambia has done a lot in its political will and confidence in gaining investors' interest in the economy.
So let's come to Nigeria now. So we heard from the World Bank country economist for Nigeria in a recent speech. He said that Nigeria's central bank is trying to boost growth, keep foreign exchange stable, and also fight inflation, describing it as a fool's errand because a central bank can only control 2 of the variables at any given time. What do you think about this, especially in terms of how the central bank in Nigeria has been working very hard? Some have said has gotten too far into areas that are not supposed to be part of its domain.
Yeah, so that statement can be seen in 2 perspectives. It's the definition of the portfolio of what the central bank is doing is also a function of if there are complementary efforts from the fiscal side as well. If you look at what the core objective of fiscal policy is primarily, there's also an angle around economic growth, because whilst the apex bank stands on the monetary bit of economic growth conversations, the fiscal side stands on the administrative bit, of these finances in key infrastructure projects, key capex projects, capital expenditure projects, and all of that. So you need a complementary effort from those 2 institutions to properly build the arguments for economic growth. However, it is pretty true to say that, okay, you can only control 2 at a time. But in the real comprehensive state of things, the central bank has not even been able to control any of the 3 to start with. And that's primarily because you need a level of enablement or support or complementary engagement from the fiscal side. Otherwise, the apex institutions will be seen as overworking or overstepping its boundaries. So part of the reasons why the central bank has been in the news a lot lately and probably has been hit heavily by analysts and intelligence community is simply because it looks as though it's taking a lot more than it should. And in the case, yes, it's actually doing that because the central bank is also trying to cover up for the fiscal indiscipline, or for the history of fiscal indiscipline by the fiscal side. You also hear about Commission of States bailouts and lending to state. That should not even be in the Commission of the Central Bank in the first place. But it's there because you have a critical chunk of states that are not commercially viable or relevant in the scheme of the national growth and productivity of the people. Yeah.
All right, so as we start wrapping up, we heard the World Bank in its global economic prospects says that policymakers should refrain from distortionary policies such as price controls, subsidies, even export bans, which could worsen the recent increase in commodity prices. And unfortunately, we've seen some form of that across many of the economies on the African continent now. If those options are supposedly off the table, what options then are available to policymakers, are available to central banks, reserve banks, in order to be able to push back against the rising inflation?
So quite honestly, there are a lot of, it's a very complicated conversation right now. And in all honesty, I think that the policy stakeholders should also begin to consider the impact of political correctness in how these policies are being used as instruments. So take, for instance, now the subsidy conversation, all right? There's a lot of political narrative weaved into that as well. It's also a pre-election year. And so the APEC institution is not a standalone. We also have a fiscal policy institution that is subject many times to political correctness. And that political correctness is also reflected many times as well in the central bank actions. So you have that, plus the fact that we are dealing in a very complex economic state. So first and foremost will be that we need to go back to the basics. What are the basic policy shifts that need to happen, to get things right? And these are the key structural questions, because the same inflation conversation we are having are born out of cost push dynamics that are largely hinged to structural issues we have in the first place. So when you fix the structural issues, you reduce the cost push impact of inflation, and you begin to deal with other dynamics that could help you manage the demand pull side of things, which is a lack of taste in made in Nigeria, that high a high appetite for imported goods and all that. So we need to deal with the basics from a structural bit. Then begin to review the motives around many of the discretionary policies. And I think that the conversation around export ban is quite valid to me, because I would think of that instrument to be weaved around enabling the non-oil stakeholders to export more within the international communities, not just raw materials, but value add that can be competitive in the global space. Until you have that, you cannot begin to position yourself competitively enough to tackle inflation. Yeah.
All right, so finally, for Sub-Saharan Africa, growth is forecast to moderate to about 3.7% in 2022 and rise to 3.8% in the next year, which is unfortunately well below the average of 4.8% from 2011 to 2019. When we look at all of this, particularly even commodity importing countries that have not, or commodity exporting countries that have not been able to benefit from the high price of commodities right now, what do you think is going to play out for the rest of the year when it comes to African economies, those on the list and those not on the list as well? Do we expect to see some economies entering into a recession before 2022 is over?
It's highly likely that some, economic for recession, you want to look at 2 quarters of negative growth. So until it's 2 quarters, you may not exactly be able to say it's a recession. But technically, I think recession is also a jargon. Many African economies are already in recession. Recession is simply the people are suffering, they cannot really meet their daily necessities, and the government is stranded. So those are 2 very key indicators of an early recession. And secondly, I also think that many African countries will take off differently, because some African countries are more on the advantageous side than the others. Some others are just purely distracted. For instance, Nigeria. So the dynamics of growth in the region would be it's a developing story in itself, because at the initial stage, in 2022, we realized that the expectation for growth drivers we're largely hinged on the East African economies. So the likes of Rwanda and Kenya and all that, we're expecting high growth rates from them. And when you cluster that across the African region, it may have a positive slide effect. But that's also to stay within the context of different components. Some African countries are likely to get into a first stage or a first quarter stage of recession if care is not taken in terms of fixing the right structural elements or fixing their own component of rising inflation and all that. But then again, the rising inflation conversation is also a fear globally, because there's an argument that if interest rates are consistently being increased globally, it will lead to a global recession. Interest rates are not the solution to the current global inflation dynamics, because it's more monetary than monetary in nature.
All right, Gospel Obele, thank you so much. I know this conversation is one that's going to continue given all the warnings we've been hearing from the World Bank, the IMF, and other financial institutions. So we'll, of course, be talking again soon.
Looking forward to it. Thank you for having me.
All right, thank you very much. And it's one that we feel, while the words inflation, recession, and stagflation may just feel like financial and business jargons across the continent, many Africans know that there is less money in their pockets and they're spending more for things that they were not spending that much for just a few months ago. So while it might be a business conversation, it's one that we feel right down to our bones and in our pockets across the continent. You're watching Business Edge. Up next is international business news. Please stay with us. Before we continue the show, let's give you a quick look at some of the stories coming in from the international business scene. Now, the group of 20 finance ministers and central bank chiefs from top economies are meeting in Indonesia today for talks on the fallout from Russia's invasion of Ukraine, with the host warning them failure to tackle energy and food crisis would be catastrophic. The two-day meeting on the resort island of Bali started under the shadow of a war that has rolled markets, spiked food prices, and stoked breakneck inflation, a week after Moscow's top diplomats walked out of talks with the forum's foreign ministers. In her opening remarks, Indonesian Finance Minister Sri Mulyani Indrawati called on ministers to work together with a spirit of cooperation, collaboration, and consensus, because the world is watching for solutions. Global mining group Rio Tinto has warned that COVID-19 related labor shortages in the resource-rich state of Western Australia and rising inflation would impact its underlying earnings in the second half, knocking its stock lower. The global miner reported misses across the board on Friday in its second quarter update on output, but maintained guidance on its full-year iron ore shipments at between 320 to 335 million tons, as it expects its newly opened Gudai-Darri mine to continue to raise production and reach full capacity by 2023. Rising COVID cases at its Pilbara operations have led to elevated levels of unplanned absences, driving a 2% drop in shipments of the steel-making commodity in the first half through June. The pandemic, the war in Ukraine, and more than 2 weeks of ruinous protest over soaring living costs mean Ecuador's flour industry has recently had to surmount one obstacle after another. The country's fourth largest income generator in terms of sales, roses alone earned nearly $1 billion in 2021. With hundreds of companies growing 450 rose varieties, Ecuador is the world's third biggest flour exporter after the Netherlands and Colombia. But this year's prognosis is unclear after 18 days of sometimes violent mass protest against rising fuel prices that included burning roadblocks and arson, and has resulted in 6 deaths. Oil prices rose in early Asian trading on Friday amid uncertainty around how aggressive the U.S. Federal Reserve will be in hiking interest rates to combat rampant inflation. Brent crude futures for September delivery rose 80 cents to $99.90 a barrel, while WTI crude rose 69 cents to $96.47 a barrel. The Fed's most hawkish policy makers said they favored another 75 basis point interest rate increase at the U.S. Central Bank's policy meeting this month. This is not the bigger rates rise that traders had raced to price in after a report on Wednesday showed inflation was accelerating. U.S. President Joe Biden will urge Saudi Arabia to boost oil production when he visits Jeddah this weekend, but experts do not expect a significant increase given his administration's frosty ties with the Desert Kingdom and doubts over spare output capacity. Rising oil outputs could help bring down gas prices and ease raging inflation in the U.S., which at 9.1% in June was the highest in 41 years. But Biden's tough stance on Saudi Arabia's human rights record and uncertainty over how much more oil Saudi can produce have meant prices have remained stubbornly high, a sign markets are not pricing in expectations of extra supply anytime soon. And still talking oil, China's refinery throughput in June shrank nearly 10% from a year earlier, with output for the first half of the year down 6% in the first annual decline for the period since at least 2011. Data released today shows that crude throughput last month was 54.94 million tons, equivalent to 13.37 million barrels per day. This was up 5% from 12.7 million barrels per day in May, but down from 14.8 million in June 2021, which was an all-time high. And those are some of the international business stories we have for you. Business Edge will continue after this break, and we look at the major stock markets on the West African parts of the continent to see how they are faring this week. Do stick around. Negative feelings persisted at the Nigeria Stock Exchange this week, while the Nigeria Capital Markets All-Share Index, which had previously closed at 51,567.69 basis points, decreased by 44 basis points to close at 51,338.27 basis points. And then just to our north, I guess I might say, in Ghana at the end of the first quarter, the market had returned a negative 16% in dollar terms to investors compared to 1.6% in cedi terms. At this time, the cedi had lost about 15% in value to the US dollar. This performance is in sharp contrast to that of last year. And joining me to make sense of this is, of course, none other than Azeez Lawal, Managing Director of Trustbanc Asset Management Limited. Azeez, welcome again to Business Edge. Thank you for joining me.
Yeah, good morning, Tolu. Thank you for having me.
Morning to you too. So we see this negative sentiment that persisted on the NGX as the market closed just a bit bearish. What do you think is causing this downward performance?
Yeah, once again, thank you. I mean, the downward performance, it is across board actually. I mean, week to date, all indices under our watch have seen decline, particularly the NGX industrial goods and NGX insurance. They are the major drivers of this decline. Week to date, Cornerstone Insurance alone has gone down by about 20%. We've seen around the same for NEM and ICO. Specifically, NEM has gone down like 9% and ICO by 7%. That's for the insurance. And for the industrial good, the major driver of that decline is Boa Foods, though that was because they marked down the company for dividend payment. So I mean, so the decline is across board really, and is expected to persist until we start seeing half-year earnings from companies. Thank you.
So you have the equities investors that lost about 124 billion naira from their investments as the market capitalization dipped 27.685 trillion naira, representing a 0.44% downtick from the 27.809 trillion at the end of the previous trading session. And as you said, we've seen this sort of across board right now. So these figures seem a bit grim for the market. What picture does it paint for you?
Yeah, I mean, it's one picture, right? The bearish sentiment. However, the fact that the depth of this negative performance is still shallow relatively and is not persistent on a daily basis is a kind of source of comfort. Like I said earlier, and the table will likely turn as half-year figures begin to hit the market. Thank you.
So let's look at the emerging bond markets as well. So like many other markets, Nigeria has not gotten any new euro bonds. But what about the local bond markets? How has that been performing so far?
Yeah, in Nigeria's local bond market, and particularly the FGM bond market, it's been an interesting and challenging 2 weeks. in the last 2 weeks, we have seen the market has largely been driven by system liquidity. We have seen that system has closed in deficit. More than 80% of what was seen in the last 2 weeks. Like I said, it is all the time. As a result, some very sentiment have dominated the FGM bond market as market players sell down to meet their funding obligations. Because typically, what happens in the liquidity market is that once there is scarcity in liquidity, local banks begin to sell down their assets, in this case, FGM bonds, to fund their liquidity obligation. This week alone, benchmark yield has compressed by 11 basis points. Typically, when you sell in the FGM bond market, prices go down and yields go up. So, benchmark yield has advanced by 11 basis points alone. This sentiment will persist until next week when we begin to receive coupon payments that will likely ease liquidity pressure. Thank you.
All right, so let's move away from Nigeria now. So we hear by the end of the first quarter, the Ghana Stock Exchange had returned a negative 16% in dollar terms to investors compared to 1.6%, which was returned in cedi terms. What do you think the significance of this is, especially given the fact that we've seen how much the cedi has lost value in this year?
The drop is significant. Because it is significant because the performance of the stock market helps with insight on the performance of the economy. Don't forget that you can use the performance of the stock market to measure the health of a country's economy. It further speaks to the fact that that growth will soften in 2022, and we've been saying that because Q2 GDP performance of Q4, the last quarter performance of Ghana was around 7%, while the first quarter, the same period that we are reporting here, the performance came in low at 3.3%. It tells you that the stock market is a reflection of the performance of the economy. And like I said earlier, it gives insight into the performance of the economy. So that's the significant, really, particularly as soaring inflation, tighter monetary policy, and depreciating currency continues to dampen private sector activities and household consumption. Thank you.
All right. So even with this Ghana situation now, again, it's one that many of us are facing across the continent. There are those who believe that Ghana is at risk of a debt default, or at the very least is already in debt distress. How much impact do you think this is having on the country's equity markets and the performance of those markets right now?
Yes, so if the market perceives a risk of default, typically what happens is, when you say default, it means that a company has issued a bond and they most likely will not be able to pay back at maturity. So Tolu, if you have that kind of bond now, typically what you want to do is to dump it. So you want to quickly sell it before it gets to maturity. So what now happens when the market continues to sell those bonds is that yields of those bonds will go up. When yields go up, it presents opportunity for newcomers to buy at higher yields. When yields in the bond market goes up, the stock market suffers because now equity investors are seeing that there are higher yields in the bond market and they run to that. So that's it. So definitely it will weigh down on it. So risk of default will weigh down on the performance of the equity market, and that's what we are seeing presently. Thank you.
All right, so I'll take you back to the cedi as we wrap this up now. We know that the Bank of Ghana has taken a bold step to build the value of the cedi by buying more gold. And of course, earlier on in the news, we announced that they said that all gold must go through the bank before it goes to the market. Do you think so far this has had any impact, or is it a bit too early to tell with this particular move?
Yes, central banks and governments going this route is always interesting, but it's never a guarantee. And don't forget that at some point, even in Nigeria, the Nigerian government started this kind of program where they were buying bonds from local producers. So as far as for Ghana, it's too early to tell. Though the plans for Ghana's gold purchasing program began in 2021. But started in earnest in 2022, and the goal was really to counter a devastating inflation and to back the cedi and bring life back to the economy. If we take just inflation out of this, out of the one of the positive that should come out of this, at the beginning of the year, Ghana's inflation was around maybe 13.9% thereabout. Currently is well above 27%, like has doubled, despite the fact that they have commenced this program. So we can't see the impact yet. And again, it's too early to tell. It may come good for the country in the long run. Thank you.
All right, Azeez Lawal, thank you as well for joining me. We'll see you again soon.
Yeah, thank you so much for having me.
All right, and that was your stock market updates, quickly looking at how things were playing out for the NGX here in Nigeria, as well as the Ghana Stock Exchange, the GSE, in terms of capitalization and the behavior and performance of the markets. Now, before we go, let's look at some stories we're tracking with NC4 to watch. The International Monetary Fund has reaffirmed its commitment to supporting Ghana following the conclusion of its visit to the country. The discussions focused on improving fiscal balances in a sustainable way while protecting the vulnerable and poor, ensuring credibility of monetary policy and exchange rate regimes, preserving financial sector stability, and designing reforms to enhance growth, create jobs, and strengthen governance. The adoption of the highly anticipated model law on public financial management has been completed at the 51st Plenary Assembly Session of the Southern African Development Community Parliamentary Forum, raising hope in a region where a lack of accountability in the use of public funds has consistently hampered socioeconomic development. The Plenary Assembly is the SADC's PF deliberative body and the highest decision-making body, bringing together 15 country parliaments. The South African rand hovered near 23-month lows in early trade on Friday as the dollar briefly paused its ascendancy after two Federal Reserve policymakers said they favored a smaller rate rise to fight soaring inflation. The rand traded at 17 rand 19 cents against the dollar, up marginally from its previous close, but not far from Thursday's low of 17 rand 30 cents, a level unseen since August 2020. Traders have ramped up bets that the Fed would go for a full percentage point at their July 26-27 meeting after hotter than expected U.S. inflation data on Wednesday. And West Africa's first fiber optic factory has been inaugurated in Ogun State, Nigeria. The factory, built by Coleman Technical Industries Limited in collaboration with American firm Fiber Business EMEA, is the fifth of its kind on the African continent. The factory will provide jobs and also ensure technology transfer from the U.S. partners to Nigerian engineers. And that's all on this edition of Business Edge, and brings to a close Business Edge for the week. Don't forget to follow us on social media. We are at News Central TV. Head to our website, www.newscentral.africa, and of course, download our mobile app on Play Store and App Store. Till next time, I'm Tolulope Adeleru-Balogun.